Hey everybody, welcome back to the VIP Financial Ed channel. My name is Matthew Pillmore. If this is your first time here, glad to have you. Thank you so much. We just went cruising past 45,000 subscribers. Thanks to each and every one of you guys, this community, this family of people that are sick and tired of the ordinary and average way of banking and borrowing continues to grow and inspire me each and every day. I apologize in advance for the camera movement. I actually wanted to do this video live and I'm having some trouble with the internet. So we're going to just talk real quickly about the progress being made here on cryptocurrencies using the debt weapon process. I'm also going to give you a quick update on what the federal interest rate hike might mean to you. Took a few notes on that for you as well. If you didn't catch it already, make sure you visit the video from just a couple days ago where I sat with one of my senior coaches, the senior coach here at VIP Financial Education, Mr. Jesse Garcia. Absolutely superb skill that expert has. And so we had a chance to kind of interview him about what can people expect to accomplish as a coaching relationship continues between us and anyone wanting to accelerate their financial goals. So if you're curious to hear a little bit more about what we do, make sure you check out that video along with a lot of our longer videos here on this channel. Basically, we reveal a revolutionary way to reinvent how you're banking so that you can get a lot more with the same ingredients you're already working with. So with the same income level, with the same spending habits, how can you make it further in a shorter period of time, save a ton of money, and basically kind of hack the banking system? So a lot of really cool, interesting topics shared on this channel. I started to tell you guys just a couple weeks ago that I had planned on using a debt weapon. I went live, shared with you that I borrowed $7,500 from that debt weapon to fund my first week of crypto investing. So how has that been going? You might be wondering, been getting a lot of questions on that. I'm pleased to announce that we've remained bullish about our activity. So what that means is we're still in the buying mode. I told you I was planning on using anywhere between 15 to 30,000 from a debt weapon. Now what that means is we've actually borrowed money from banking institutions, and the debt weapon that we chose to use for this example was an unsecured revolving business debt weapon. These are accounts that we help people get access to. It doesn't even report to my personal credit report. While I have a lot of debt weapons that do report to my personal credit report, I often favor those that don't because it will allow me to use more without any negative side effects to my credit scores. So I borrowed money. First week was $7,500. The second week was $7,500. And just as of Thursday of this week, we entered into the start of our third week, and I decided to place another $7,500 bet on the bullishness or my expectations for an ongoing increase to the value of the three primary cryptocurrencies that are offered on Coinbase. Now, Coinbase is the app that you would use. I had recently heard that it recently became the single most downloaded app on the App Store. So obviously there's a lot of hot interest right now in the crypto world. You've probably been hearing people talk about Bitcoin a lot lately, and we certainly felt a fear of missing out on that too. Now, this channel has nothing to do with crypto investing at this particular point. It has nothing to do with investing really at all. Yes, we do touch on investing options from time to time, but we are not investment advisors. We simply help people maximize their borrowing potential so that you can get access to lots and lots of capital and then have an opportunity to put that capital to work how you see fit. You are likely not going to take the same investment decisions and the same investment paths that I took, unless you're planning on running several businesses, one of which is a financial coaching service. So if you're not investing in the same things, really it just boils down to the opportunity that you can have to invest. And it's all about cash flow, guys, okay? Cash flow is the amount of money that's left over at the end of each month that gives you your opportunity to remain flexible with where you are and what you're doing with your time. It's all about freedom of time. So very exciting things taking place after putting that $22,500 in. For any of you who are currently tracking the uptick in this brand new asset class, it is exhilarating to say the least. So in just the past 16, 17 days now, our investment has grown from 22.5 to almost 37.5. That number obviously fluctuates by hundreds or even thousands every single day, both upward and downward. And this ride is not going to be for everybody. I can tell you that right now. Not everybody is cut out for this. In fact, I just got done responding to a couple of messages from my parents who are both incredibly concerned about my decision and have become negative Nancy's toward the idea. Now, my recommendation is to only put into an investment what you're okay with losing. I will be completely okay if we end up ultimately going to zero on this $22,500 that's put in. We simply pay off the debt weapon and we'll continue on with life. And that's what I explained to my parents too. The problem is when we're surrounded by people, friends and family, who aren't qualified to be offering advice, so often we end up taking it from them anyway. So one of the points I want to take away from this experience and share with you is you shouldn't be listening to everybody around you. Be very, very careful about who you surround yourself with. The people I actually take my advice from are highly supportive of my decision to put money into this alternative investment because the upside potential significantly outweighs the risk of loss. If I do lose 22.5, I'm going to be much happier that I went along for the ride and made the bet versus not making the bet at all. So regardless of what happens, I'd much rather be in it than miss it. So that's where we stand in terms of our crypto debt weapon utilization right now. So far, the banks have purchased me $37,000 worth of cryptocurrency and have done so with just $22,500, of which I'm now paying about $110 per every $7,500 per month. So that means I'm paying about $330 per month. And so far, like I said, we've generated roughly $15,000 some odd dollars in profit. Now, this is a taxable event. I think there's some confusion regarding crypto and what that might mean with the IRS. There are a number of taxable events within the use of cryptocurrency. So make no mistake, whatever is pulled out, even if I chose to pull out the original $15,000, my understanding, and I am not a tax advisor, so please make sure you consult with any tax professional that you trust, I will be taxed as a capital gain on anything gained in this process. If I lose, same thing, we'll be claiming. So really exciting things. I couldn't be more happy. 15,000 in just over 2 weeks. Why wouldn't I be happy? I didn't put a single dollar of my own money into that. So while it's very easily calculated at something around 65 to 67% ROI so far, that's on the money invested. Because the money wasn't mine and the banks actually bought me this crypto, frankly, it's an infinite ROI. So I'm tickled at the moment. All right, so let's talk quickly about how the federal rate hike may or may not affect your finances, because it will have far-reaching consequences, and some of them may matter to you and some of them may not matter to you. So let's quickly kind of go through this. I've got some notes here I want to go through. There was a federal quarter-point rate hike on Wednesday, so 25 basis points, and that is the 5th time they've raised the interest rates since December of 2015. So let's talk what it'll mean to credit cards. So most credit cards do have variable interest rates, and that means that there's going to be a direct connection with the federal rate. If you are carrying any kind of a balance right now at all, you're going to immediately feel the effect of that. A 0.25% rate hike is basically going to affect the average debtor that carries a current balance. And the question becomes by how much? The average person carrying a balance pays around $904 per year in interest on their credit card balances alone. Tacking on a 25 basis point increase is going to cost us credit card users, and especially those who actually pay interest, roughly $1.5 billion extra in finance charges in just 2015, if you can believe that. As far as mortgages, if you have an adjustable rate mortgage, you should expect some changes to that at your next adjustment period. As far as home equity lines of credit, interest rates are going to start climbing on those as well. Now, this is not going to be any type of financial threatening increase to interest costs or minimum monthly payments for those that have home equity lines of credit and make minimum payments on those each month. So I wouldn't expect to be devastated financially, but I do think that it's indicative of where things are heading. It's fair to say that it's most likely that things will continue to increase and become more expensive than decrease. I think the days of 3.5% record low interest rates on 30-year fixed mortgages are behind us. The average interest rate on a 30-year fixed loan today has now exceeded over 4%. And that's why when you amortize these out over 360 months, which is a 30-year loan, the numbers are ridiculous. Get a hold of the Cash Flow Cruncher worksheet that we send out. when you schedule your one free coaching session and start playing with the amortization schedule in that spreadsheet. I also released a video just a few days ago talking about how to accelerate the elimination of mortgage debt and how much interest that can save you. In just the 30 months, I proved, first 30 months of this example, the first 30 months of a 30-year loan, so that's what, 2.5 years, I was able to successfully eliminate $90,000 worth of future interest costs that a normal borrower would end up paying. Furthermore, we were able to shave like a dozen years off of the lifetime of that loan in just the first 2.5 years. Unbelievable capabilities that those of us that understand how the banking system can be manipulated have, and that's why you're on this channel. So if you haven't done so already, consider subscribing below. Make sure you turn on the little bell notification so that you're alerted every time we put a new video out. Also, please drop a like on this video if you want me to go into more details and give you some current updates on things like cryptocurrency. If you want us to give updates on things like interest rates, then make sure you drop that like. It helps us very much because YouTube starts to favor our channel even more than they are now. Also, make sure you're involved with the community, meaning put some comments below if you have any other questions or comments you want to talk about. Are you involved in crypto? Do you think, like my parents do, that this is potentially a huge bubble and we're threatened to lose all of what we've put in? Certainly it's a possibility and there's a gamble here. The other thing I'd like to hear about from you is whether or not you currently revolve balances on your credit card. So leave some comments below and let me know if that 0.25% interest hike is going to influence you. I've always been of the opinion that interest rates are interesting. Yes, they matter. No, they don't matter as much as we think they do. What matters the most is how much you pay in total interest costs. So it's the actual dollars and cents that matter to me. And as soon as that started mattering to me more than the interest rates, things in my financial life started to change significantly. So if you want to be a part of that, again, check out all the videos on this channel. Make sure you stay tuned for next week. We're going to start talking about how this 0.25% rate hike will affect mortgages directly. I'm going to be bringing in Joe Massey, one of the most popular and utilized mortgage professionals here in the Denver metro area. So we're going to get his perspective. He does hundreds of deals each year, and I'd like to get an idea from him as to where he thinks things are moving and how that might affect you guys as an audience as well. So we're going to be talking about some really great things as to what you need to consider when you're getting mortgages now and in the future. And guys, I really appreciate you being along for the ride here. This is going to be an incredibly, incredibly exciting next couple of years. We're going to see things that we've never seen before, and there will be opportunities that we've never seen before to create enormous sums of wealth. I hope you're along for the ride with us on that. If you haven't yet done so, make sure you get your one free coaching session. We'll put the link in the description below. And until we see you on the next video, thank you so much for being a part of this as a cash flower. Make it a great day and take care.